Well, the Reserve Bank, as we said, considered raising interest rates at its April meeting. It was thinking about anecdotal evidence of wage rises and increased migration to Australia, but it kept those rates on hold. Well, today, one of Australia's leading economic forecasters, Deloitte Access Economics, says the RBA has put Australia on a knife edge. Its principal partner is Stephen Smith, who joins me now from Canberra. Stephen, many thanks for your time. When you say the Reserve Bank has placed us on that knife edge, why is it responsible, do you believe?
Ross, we're concerned about Australia's economic outlook in 2023, and most of that concern centres on Australia's households. It's not just interest rate rises, there's also a rental squeeze, negative real wage growth, broader cost of living pressures. Australia's households are doing it tough. Those interest rate increases are really adding to the pain, and so we see consumer spending going backwards this year, and that's why we think the RBA may have gone too far in the last couple of rate rises.
You more specifically say there was no need for the two rate rises in 2023.
That's right. On our reading, all of the evidence suggests that inflation peaked in Australia in the December quarter of 2022. Still very high, but peaked and likely to come down through 2023 and 2024. That means that we think that the work of the Reserve Bank through 2022 perhaps should have left interest rates where they were and then let that play through. But hindsight's an easy thing, and the RBA does have a difficult job. So look, not critical, but just a different view.
Okay, so a different view, but then there is also the argument about the fight on inflation, and that inflation perhaps is not yet dead and going back to its 2 to 3% band. You've got, as you mentioned, rents rising in Australia right now. You've still got full employment and the prospect of a wages breakout. You've got oil prices that have spiked back above $80 US a barrel. All these things potentially are inflationary, including the very low Australian dollar. So, it might be a situation where inflation is not yet dead. Where does that weigh up as compared with the hurt that consumers and households will feel?
Well, I think a couple of points there, Ross. Firstly, the chances of a wages breakout and wage price spiral in Australia very, very low. We have seen some modest increase in wages, but nowhere near the levels that would concern the Reserve Bank in terms of putting pressure on inflation. Those broader pressures that you mentioned, certainly some of those will place upward pressure on inflation, but overall we see inflation trending downward through 2023. That's not to say there won't be some spurts and fits and starts of inflation over that period. Oil prices is a good example, and you mentioned rents. So the trend is down, but there will be a little bit of volatility still in price growth.
Okay, so there's a federal budget coming in 3 weeks' time. What role does the government have in trying to suppress the inflation and really maintain it? Because there are expected to be cost of living relief in there, but then even if the government starts handing out money, that's another inflationary impact.
That's right, Ross. And just like October, the government finds itself in a very difficult position in this May budget coming up in a couple of weeks' time. On the one hand, they need to be very careful not to stoke inflation in the economy. On the other hand, there are households genuinely doing it tough in Australia. On the Reserve Bank's own figures, around 300,000 households experiencing negative cash flow. That is, essential spending plus mortgage repayments exceeding their disposable income. And so, there's challenges on cost of living. At the same time, there's inflation pressures that we think are coming down but are still around. And so it's a difficult balancing act for the government.
A difficult balancing act for the government and the Reserve Bank. The Reserve Bank seems to have taken this view that it will try and glide Australia's economy back to that 2 to 3% inflation band, even if that takes until 2025 or 26, trying to preserve the jobs. You talk about those 300,000 families who are now, sort of dipping into their savings to survive. The reality is they'd be a lot worse off if they lost jobs as well.
Well, that's true, and you're right. It's a balancing act for the Reserve Bank as well. The Reserve Bank's got a difficult job because its instrument that it uses, interest rates, is a very blunt instrument. It can't be targeted particularly well. And it also acts with a lag. And so the significant increase in interest rates that we've seen to date will continue to be having an effect, tightening effect through 2023. And so it's really a wait and see approach. One of the broader issues that we think is whilst we think economic growth is slowing, population growth at the same time rising. And so that means economic growth per capita essentially going nowhere over the next 3 years. And that's a problem for the economy as well.
And one thing also with more immigrants coming to Australia, you say 600,000 over the next couple of years, is that naturally the unemployment rate must rise unless all of those people immediately go and find jobs. You see the unemployment rate rising above 4% from its current rate of 3.5%.
We do see it rising up to about 4.6% in a couple of years from now. That's still relatively low by historical standards, and there's that's still a pretty solid labour market, a pretty tight labour market, and so yes, an increase in the unemployment rate, but certainly not up to levels that would be sort of overly troubling from historical standards.
And looking at your growth areas for the various different industries, is there one industry, if you had a choice right now, you'd really like to be working in?
Well, look, I think there's some sectors which are naturally a little bit shielded from economic downturns and the economic cycle. Health and education are a couple of examples there where demographic drivers and underlying demand will remain strong. On the other side of the coin, the construction sector is really feeling the pinch at the moment. Insolvencies in Australia, about a third of all insolvencies coming from the construction sector, and that'll be a problem for housing supply over the next couple of years too. So, yeah, certainly a mixed outlook, industry by industry.
Yeah, Stephen Smith from Deloitte Access Economics, many thanks for your time today.